Hello guys. Yeah, back again, Casper. Different video today. We have a little bit of uranium, a little bit ETFs, and a lot of ratios. So this video here most of it will be, ratios and what I found very, interesting and bullish at this moment, where we focus, of course, on uranium, gold in relation to other stuff that is, building. Um, on top of our already bullish thesis. It's good to measure against other things. But first and foremost, we are going to look at quickly here ASPI. Again, we tagged it here. Where are you? So this was the previous highs, triangle high hit, bull flag into green support, bouncing now today. So ASPI looks really good. We called the buy upon that break there. Had a little dip yesterday, and now it looks like we're going to go. And if you want to buy in, I say anything north of 8 at the moment looks good. So yeah, I'm still fully expecting, this bouncing here to continue and actually reach 20. So and then we have Cameco as well. What a player, right? A 10 bagger since almost a 10 bagger since the lows of excuse me, it is more than the 10 bagger, but from the breakout point, we're talking 7x. Beautiful. Again, you can see here we tagged the all-time highs and we have done nothing for a little over a year until recently we finally broke this megaphone here, right? Breaking out today. Um, Again, extremely bullish as we speak. And I fully expect on as long as the yellow here holds true to hit the upper trend line here, right? We have a channel going on there. 1, 2, 3, 4, 5. So that is valid. And again, I'm aiming at roughly 120, which is $50 on top, meaning 60, 70% really on chemical. And imagine what that will do to the ETFs, to the smaller guys and all that as well. So Cameco really, really strong. One thing we have to look out for is if we break the blue and then the yellow. That is possible. And if we ever start, in my view here, for the next week or two, start to trade in below roughly 67, I would actually exit and just be on the sidelines for some time, because then you have a false breakout and you break the massive steep uptrend here. So be careful with that part. UEC here, I start to like UEC. Overall, a bit of a messy chart, if you look again, this is roughly 20 years. There are some order to the madness, but basically we are somewhat range bound here with an upsloping channel. And we haven't done anything basically for half a year where we started to do some bad things here. But now, looking at the daily, there will be an entry, another entry actually, because we have had it there. But this is one of the bigger ones we're about to break here. And anything north of these two little highs there at roughly 7.2. And I think UEC is in for some really, really nice moments here where we're gonna, did we actually, yeah, tag all-time highs here. We're gonna go to all-time highs and break through, in my view. And again, you simply have a stop below that candle there when we break, roughly $6. That's your stop. You can also see here uptrend, boom, there it is on the daily. So again, UEC north of 7.2 is a really good buy in my view. Looks really promising here. Again, what do you do if you want to get in? You set limit orders here. Again, set the limit orders in so they're already in the market before it hits the target, right? And then when you get the order, you can have your stop loss later on, but set it here. Again, cup and handle as well. So 7.2, and I'm expecting this fully to rally initially. Really nice. So UEC finally looking very, very promising. Remember, we had the head and shoulders as well, which we also mentioned. Breakout back test, cup and handle, breaking higher. Yep. Target for this move here is 9, triangle high there. So that's the first target, but I fully expect something like that. Again, I expect that. Do we see it? We don't know, but that is my view. COPEX, oh, looks good. If you want to get into copper miners, I think this is a really good time to do it. Again, remember, we talked about buying on that wedge, right, at roughly 42. 42. Funny, eh? Um, 30 weekly, the 30 week, what am I saying here? The 30 weekly moving average, it's getting late here, is also coming up nicely. Stage two breakout, we are gonna charge the same target when we broke here at 42. First one, 53, and then this one here. But I'm having, feelings that, hey, we could easily do that as well. Um, Really good entry here in my view. And stop loss is below the blue wedge right now at roughly 40. Again, big target is all-time highs really. So 60, 62 initially here. Copper miners looks fantastic. Again, good feeling. Again, feelings doesn't matter, but sometimes you just have a better gut feeling that this is actually quite nice. So I like it here very, very much. Fan, I know, wind energy, boo, but we are actually getting to some place where this main driver, that uptrend there, and remember, I could easily put on a lot more stuff, right? But to me, a channel like that, I don't really care. It doesn't matter to me at this moment because it is not important to me at least. What is important, however, is this little weird, very weird head and shoulders. Ooh, and we're breaking above here. So anything north of roughly 18, which we are, is again really, really bullish for fan. So I think there is money to be made here. Um, yeah, I really do believe so. Dividends, basically zero. And yeah, we believe fully until disproven that that is intact. So we're breaking here now at 18. I will say I actually believe that the first bigger target where you should thinking about taking profit is roughly 25. Again, just the whole view of it here, 25 for fan looks good. REMX, I think could be a big winner long term. Again, if you have the again 42, what is it with the 42 guys? Again, I'm really not making it up here. You can see the breakout here, 42, the 4.2 and the 420. They come up so often. It's not a, it's not a coincidence. It really isn't. So when that one break, in my view, even though this is a little bit, right? I think we can add a somewhat of a, yeah, but I like that. It's okay. It's okay. So 42 here on REMX, which is rare earth, the ETF, you have a lovely entry. You really do have a lovely entry. And then let's see what happens. But again, this broadening structure, we can dream sometimes, right? But yeah, very good entry above 42. We are 1-2% away. And I think you have a 3-year downtrend broken. And you might need a little bit of grinding and all that, boom, 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 and then we are gonna grind it higher, something like that. So yeah, not too bad, not too bad. REMX, who would have thought? EWC, which is the Brazilian ETF, I think is at a prime spot. If you want to be exposed to emerging markets, Brazil, 6% dividend, very early pre-breakout, this is time to invest into EWC. And I have been investing my kids, at least some of my kids, they're what's it called? We have a like a child savings fund that you can do. And through that you can, buy stuff if you want to. And I have bought uh, like one third, maybe 40%, but at least one third of that for each kid, I have bought into the EWC with fully expectations that such a beauty here is going to perform great. And again, if we can snatch, this entire move here, which I think actually that is my belief. Again, emerging markets, weak dollar, commodity bull market, and this setup here alone is just a dream coming true. And we have been waiting for a long time, but I have plenty of time. And I have a personal position as well, where the last little third clip was bought here at roughly 27. And now I have what I need. So hopefully we are right, but the target is definitely up there. And again, once we break this bad boy here, which I believe will happen, otherwise I wouldn't invest as I do, the big target, of course, and I see them getting hit on, not always, but very often, is actually the triangle high. That is just such a big magnet, and in this case, all-time highs. But again, measured moves as well is 335, and we are now at roughly 30. So over the next 10 years, this could be, I say could, don't quote me. Um, I could see this actually have a big run up like it had here once we start to break and actually just completely slam everything. And you're getting paid 6% each year for 10 years. Plus, I mean, if you have, just, I wouldn't say the guts because you don't need guts, but if you can buy here, right or wrong, I think it's a really good pocket because we're breaking this 2-year, almost 2-year trend line as well, breaking out, flagging a little bit as well. Everything looks good. If you can buy it here and just forget about it, you should do well. Should. Again, you should do well. So I really like that one for sure. And URNJ ETF, one of the more lively ETFs. Again, it's junior uranium. What would you expect? But um, we're actually trying to break. Again, it's very delayed compared to URNM and URA, which is totally understandable. Again, juniors are lagging the majors. And then they, at the end of it all, they outperform. But initially, the blue chip guys, the big players, are the winners. You saw that in gold. You see that when you have like a crypto boom, the Bitcoin and all that initially are better, and then all the small crap, outperforms. But we are at a point where we're about to break right around here. When that breaks, I do expect this one to do well. 30 weekly moving average is also coming up nicely. I'm aiming for initially higher highs, but actually and beyond, right? And beyond. So yeah, anything north of roughly 22, 21.5 and 22. And I believe we have a good, solid move on our hands. The risk here is, again, we break out. Yay, happy days, back test. Ugh, right? We're breaking the very steep uptrend, which is nice. Something that I'm learning to appreciate. But we're also having a false breakout. So the stop when you break here is below this candle there, which is 20. Maybe 19.6 just to give it some wiggle. But that is your exit if you go long at roughly 22. I want to show you I want to show you the uranium spot price. Again, I'm sorry with my voice; it's very rusty, what to call like overloaded. I have done a lot of work in the past few days, not only here on Substack, but in different stuff as well. So speaking quite a lot. Um, just the look of this chart, I mean, I am bullish, and I really hope you are as well. And as a matter of fact, I've bought one third to the child's, their account, whatever we talked about earlier, into the Sprott physical as well. And also I bought the SPPP. So again, there I have this is the main at the moment. So I have dividend and I have two really good commodities in my view. Long term should do well. So the uranium spot price peaked right there. And this was actually something that I called, not here on the Substack because it wasn't made at that point in time. But the target for this run up here was somewhere between 100 and 130, which is this major gap. And we hit roughly 107, yeah, 107 there. And we have been bullfighting ever since. This is actually 18 month, a very long period. But from a chart point of view, at least for now, perfect. And how big was the pullback? Again, we pulled back to almost the 50%, which is not a fib, but the 50% pullback here. And that is not fun to be a part of. But what we can see is actually just a beautiful backtest. A beautiful horizontal. Actually, this is the gap, by the way, the blue one there. But again, this little, it's not a cup on handle, but again, this trend line going across two major pivot highs. And we backtest and we should go higher for now. Ideally, we had a connection there, then we would be 100% sure that that is a level we won't see in a very long time. But again, just the beauty here. We're going to go to the weekly just to get some details on. So yeah, again, very big bull flag breaking out, going higher. The Sprott Physical Uranium Trust has done the same. Again, 2024 on the U.UN was the go on that one. And I think we are at 25, 26, something like that at the moment. So overall, beautiful chart, beautiful chart. And yeah, until disproven, we are extremely bullish on the uranium spot price. And therefore, uranium in general. The miners will do well. The ratio we will get to, no, we will not actually, but you know the URA divided by the U.UN. Yes, I say it all the time. A chart that I'm very, very proud of to have spotted and actually kept me. And that was actually the main driver for me and has been for like 18 months to 2 years time. So uranium, at the moment, this video is recorded long term, short term, midterm. I think everything is firing up. Beautiful. Beautiful. Good. Ratios. Let's do some bloody ratios. And this is just to give a mix of different things that I find very interesting, very bullish for the things that we are talking about. In this case here, we have gold divided by the DJI, the Dow Jones. We're going back like a billion years here, back to, I don't know, yeah, 1990s, the 1900s, my bad, excuse me, going way, way, way back. I didn't even know that they were trading back then, but anywho, might be paper. It is paper, of course. But the broadening structure here, very, very precise. It's very, very precise. Like, again, technical analysis, does that really work? I mean, look at the boundary that we have here. So we have expanding volatility in this ratio for over a decade. And you can see every time we get to one or the other, you're getting sapped and you go straight down or straight up after that. This right here, in my view, is interesting. So one thing is bullish, and that is we are actually lurking with a breakout here and very early stuff here still. So let's see what happens. But the monthly, 30 monthly moving average is coming up, which is, of course, 4 times as delayed as the 30 weekly. So when that breaks, if that breaks, you have gold. Therefore, commodities outperform SP 500. Beautiful. The risk, or again, if you have bearish glasses on, is that bear flag. So that is that. So in order to really engage, we need to break this bear flag to the upside, and then all bets are off in favor of gold and therefore commodities. So yeah. Okay. Cool. Let's see how that is doing. Um, the gold and silver ratio important? Hell yes, it is important because I know there's a lot of things going on here. Don't mind that. But basically, how I see this is if we can break roughly, 92 to 90, leave that zone and get below that one here, silver is gonna absolutely smash gold. I mean, big time smash gold. And we're gonna rally all the way down to here, roughly 80, pull back, and then boom, 1, 2, 3, 4. That is my view. If we can clear 90 for good. Um, that's gonna be one hell of a move. And then you have a large bear flag breakdown. A lot of good things could be lurking and starting below 90 here. Of course, we have to wait and see when we get below there, but there's a lot of good things happening. Also, here you have this channel there. You're breaking that as well. But this also means we have a gazillion amounts of support here. Therefore, we are not making this call until we break that 90 for good. Like a weekly close below 90 would be ideal. The spot price of uranium, excuse me, URA divided by energy, oil, and then the spot price of uranium. And this is basically my view of measuring a sector, in this case mining, that is very energy heavy. Measure that against what they pull out of the ground. And if this was a stock, you can see that actually we have made a huge bottom for 10 years, finally breaking out, back testing within a perfect bull flag. 1, 2, 3 impulses within that bull flag as well, right? 1, 2, 3. And now you're breaking out, you're back testing it, and you're rallying higher. And we might see a little pause here, by the way. But anywho, um, this just means to me that the uranium miners are making more and more money compared to how much energy slash oil that they use uh, in relation to the metal. So this is just a beautiful chart. This is a sign to me that uranium miners, most likely Cameco, the big guy, is just printing money. And the higher we go, the more they make. Right? Could this be something? If that's the case, whoo, right. So really good ratio. And I like to look at this and just see it from a different perspective and just, yeah, this one is also good. Remember resistance, right? Roughly 46.5 is resistance here. And let's see how it does there. Uranium divided by Bitcoin. This is actually one way I saw it just before I went online or started recording. I'm like, interesting. And that is because we are within a 10-year, almost a flat range, but definitely a channel. Yeah. Undercut here. Yeah. And then we have this perfect wedge. So if that breaks, again, if we start to get above here, let's do that so we can zoom in here. When we start to break the blue wedge here, you can see it here also there as well. So when we break it here, what that means is that you have a stage 2 breakout attempt in relation to the URNM and Bitcoin. And as you know, my view on Bitcoin, you can make a lot of money, but it's basically leverage tech. So this also means that you will have URNM outperform the Nasdaq, right? And if this whole ping pong here holds true, we could be in for some very fun stuff here. But the first step is to break here, which I think can be a little bit of a pain potentially. There's a gap as well, but definitely worth looking at every week on like weekly closes. Yeah. URNM, there's so much stuff going on here, divided by the NASDAQ. So again, here we have the NASDAQ and somewhat similar. You can see we have the same type of range here, even though the Bitcoin went down like that, but we still kept within this range here, sloping up a little bit. And then we have a 18-month break in this case now for URNM over the NASDAQ. Channel break, beautiful. 3 impulses on the downside. URNM, the miners of uranium, is set to outperform as long as this statement here holds true. So um, bottoming structure there as well. I'm lacking now for some reason. Yeah, uranium miners, they look good. They look fantastic also when you measure it against the Nasdaq, which everyone is bullish on, the mainstream Twitter and all that. Then we have a few, more than a few, but that is actually bullish on uranium. And we could be in for a period where uranium will outperform the Nasdaq, which it looks like at this moment in time. Gorgeous. I love that. Similar-ish, URNM divided by SPY. Are we bullish? We can be bullish on both SPY and URNM, but which one would you prefer based on the channel break here? Stuck within that sideways channel for quite a while. Breakdown, backtest, back in above, false breakdown. And from false breakdowns often comes huge reversals. So could this be? I don't know. But for now, at least, we are in stage 2 in favor of URNM. Could we have a pullback here? Yeah, we could have that. But still, overall, until this proven, URNM long term is definitely set for a better performance. This one here is actually very interesting to me. Again, URNM. I know there's a lot of uranium going on here, but again, I just went through my ratio list and I just tagged whatever I thought was really good. And apparently, uranium was, yeah, the top, winner. Um, Extremely textbook wedge pattern here. Very, very textbooky. Again, if this was a stock, you are going to buy everything you can do here when you break that one. Again, huge position and all that good stuff. So the flag here has broken, which you also could argue a very skewed cup and handle to some degree. Yeah, it has some vibes to it. The handle here has been broken, and we broke the internal red here when we said, this is most likely the starting point. of that. And in order to catch these internally here, a rule that again, nothing is set in stone, but a rule is that you would want the internal break to happen after the two first impulses. So these you don't really care about. And then when you have the third and you start to see that you can actually connect this little system here, that is your, okay, this might be the last one and we are good to go. So this looks absolutely great here. I do believe that that is what we are seeing, uranium to outperform XLE. And that will only happen when XLE is doing well also. I can't, of course you can, but I'm seeing that uranium miners, uranium, which is energy, will do well. Meanwhile, XLE does well. That is my view. So yeah, uranium miners is definitely set to outperform once we cross roughly 0.85 in this ratio. You can see it across here, actually, something like that. You know, these two highs here. Once we break that, boom, there's no looking back. At least there shouldn't be. Again, you never know, but you know my deal again. It's all probabilities. Uranium spot price divided by net gas. Wow, I'm glad we only have two. Oh, we have more. My voice is crumbling here, but I hope it's okay. So what I'm looking at here is like a 3-year view. And again, we have the similar bull flag as we have had on the uranium spot price. In this case here, we actually, within the bull flag, is making a beautiful textbook head and shoulders. Yeah, fantastic. So in my book here, once we start to get north of roughly 24, 25-ish, give or take, if we can break that, boom, you have uranium spot price to outperform nat gas also. And we're above these. You can see here we have some highs here. Then you have some internal highs as well. So we're also above this little, can you call it supply and demand? I guess you can. So yeah, but until we break it, of course, the uranium spot price is underperforming the nat gas. So I just see this often, and this is most likely. Boom. And look for 24.5 to confirm it. So yeah, GDX divided by gold. Not the most pretty of them all, but there's still some structure to the madness. And that is, again, this is the main channel for now, the main system. So this is 10 years of slightly downtrend, meaning the very long term, we're still in an overall downtrend when you measure the juniors, the gold miners against the gold overall. However, I do believe that we are changing now. And the fact is that we had this 4-year break, right? And this smaller system right here. We're breaking out now, we're back testing, right? That is what I see coming. When we start to, again, what has happened now, stage 2, uptrend. You can see the stage 2 here. Again, we're making higher highs. 30-week is coming up. Boom, uptrend. Higher highs, right? Uptrend intact. And also here, you could argue it's hidden, but it is there, the bottoming structure. So this is actually a neckline. We're breaking out, we're back testing now. Meaning, most likely, the junior and gold miners, the gold mining juniors are now poised to outperform gold, which also is going to do well. So fantastic. SPX divided by HUI. The HUI is the gold bug index, if I'm not mistaken. Is it? I can't remember. If once again, I have to check. I have to check HUI. Yeah, the gold bug index. Yeah. And you can see we had already been seeing some big cracks in the ratio, right? That's the 2011 low where gold was massively outperforming the SPX for over 20 years. And then you had the SPX do a lot of good work here. And now we have had the first, the breakdown, deep back test, back testing the flag here as well, or the channel. And again, I'm firmly believing we still have more downside until we see some big resistance. So we should have a case where the SPX will underperform the HUI for roughly 30% until we see any bigger resistances. And then you can see, I would actually also argue that this could be the case where, boom, And then we have a period of actually the SPX do better, and then whoop, like that. Because, and I only say that because we have two here, and my target is that. So, and this is very, very strong, right? So I'm expecting this, a weak bounce, and then boom. So again, gold bug index is poised long term. Again, next 5 years, 7 years to actually do really well. So yeah, GDX against oil and gold. Basically, how profitable are these guys? And you can see here they were very profitable. Same thing today. And this was the 2011 high. So the channel here very intact, right? So this means that right now we are into heavy resistance because we have the upper channel. Again, hopefully this is a bull flag. So if we can break this here, we are actually, in my view, at a place where we are already now, but we will be at a place where the gold miners is going to be insanely profitable when you adjust the gold price with the WTI. And the miners is going to print money like no tomorrow. Fantastic. Apple divided by the URA. Apple, what is that? That's big tech, very big tech. And we saw the initial the break here, the 10-year uptrend, broken backtest within that range for the better part of 3 years, 4 years actually. And now what has happened is we have been breaking down, and we had the internal break as well, which we talked about as well. And this means that Apple, as long as these conditions holds true, is going to underperform the URA by quite a huge margin. And the last little pit stop that it could take is again, let's call it triangle low, even though it might not be a triangle, but you know the deal with the triangle, that is the formation that we break the high or the low, in this case here, right? That is where I see some support, meaning we're going to have some Apple outperformance. But if we break that, I mean, we're going to see heavy outperformance by URA. Again, as long as these conditions hold true. Could it be that we're going to tag and then we're going to get back in? Yeah, absolutely. And then, of course, Apple is in a better situation than URA, at least for some period. So then we shall see what happens. But for now, we are extremely bearish in the ratio. Therefore, more bullish on URA compared to Apple. Platinum, oh, God, platinum. What a call! That again, platinum. This everything was just prime for platinum. Let's check the platinum chart. Boom! Holy bananas! Again, I didn't expect this to be this quick. And this is one thing I learned from the cocoa trade, that sometimes when you have 4-year massive compression, which the cocoa also was. Should we look at cocoa? Yeah, we should look at cocoa. This one here. This was actually 10 years, even better. Look at this setup. I mean, I can't stress enough how insane this setup was for cocoa, and how big time I messed it up. Again, this was like 2 years ago. I've learned a lot since, but I basically took, I'm not saying it's right or wrong, but one thing I would have done differently is to not take full profit. So I took the profit there and I was happy. I'm like, yeah, I'm going to get some more. And then, boom, we went from 4,000 to basically 12,000 in a blink of an eye. I'm not saying that that is going to happen to platinum. I'm just saying that hitting the triangle high after a major breakout, if you want to take profit, don't take it all. Again, depending on your style, but again, if you are somewhat mid long term, maybe take something off, but don't take it all, because you will be standing at the station looking at the train just blasting away. So, but absolutely insanely here. Again, we are breaking the triangle highs. What we tend to see, again, we can easily break it and then stall, but ultimately we're going to go higher. So I'm extremely bullish on platinum, long term, mid term, short term, maybe a teeny weeny extended. So again, if I were to have my bearish glasses on here short term, I would say we could be back testing the highs, right? We have 3 spikes here and 2 of the lows. So this could easily be the last little pop here for this move. and then we're gonna correct for some time maybe, and then we go again. So yeah, I'm not changing my fact. I think we're gonna see all-time highs within uh, at the absolute latest 2027. Latest. We're only a few bucks away, really. I mean, it's only 60%, and yeah, 60% is a lot. But again, you know how fast things can move, and 60%. Basically, gold did 60% in a year, and platinum is way, way, way smaller compared to market cap and all that. And one thing that I've heard today, I knew this before, but I haven't really thought about it in that way, and that is, I don't think what we're seeing here is supply and demand. You know, there might be some, of course, but you can actually have equilibrium, equal, supply, equal demand. But if you have the fiat, that you're measuring in getting completely destroyed, you can have this as well. So of course we are seeing, in my view, also we are basically mining zero platinum. So there is a demand for platinum. On top of that, you're seeing the dollar getting smoked. Every fiat, adjusted for inflation is getting smoked, of course. So you're having a beautiful cocktail here on platinum, and don't sell it yet, guys. There will be places where we pull back 20%, 30%. They will come. I can guarantee you that. But again, we know it's going to come, and therefore we are not going to sell. We are going for a lot higher prices before we even consider, selling out big time. And personally, I would just say if we get to all-time highs, when we get to all-time highs, you can maybe take half off, but don't take more than that. Anyway, that was platinum, which again wasn't planned here. Platinum divided by silver, and I can remove some stuff here as well just to get a bit more clear. Um, Silver is going to do fantastic, but platinum here, false breakdown, boom, boom. I think platinum will be the big winner here. Um, Especially with the momentum that we have now on platinum. I think platinum is going to be the big, big winner against silver. Silver is going to do amazing things. Not going to lie. It's going to do absolutely, beautiful stuff. But platinum here could do way better. So, and it's a tiny, tiny market as well, platinum. And it's 30 times as rare as gold also. Here we have also platinum, the final one here measured against gold. Very clear downtrend, insanely clear. We almost clipped it there as well. Internally here, which is a 25-year channel, 25 years, absolutely, almost my lifetime. Not true, but we're seeing a mega reversal here, meaning people are buying the ratio head over heels, where they're buying platinum compared to gold. And I think it's like long platinum, short gold, to be honest. And then I don't know exactly how that works, or you're just playing the spread. Again, I don't know. But to me here, this is, again, we could see some stalling there. But once we break the yellow here, platinum is going to smoke gold. And if you have, physical gold, or you have the ETF in gold, you could consider starting to swap or think about swapping very soon. Anything north of 0.5 in the ratio. And I think we are on something absolutely astonishing for platinum. So yeah, what I call platinum was we're up like 40% on platinum already. SPP is doing well. Palladium is doing well. Rhodium. Let's do rhodium. Yeah, let's do rhodium. And then I definitely want to leave you guys because I am tired and my voice is no more present. So I hope that's okay. But I love talking about this. And here I have rhodium. I think my view is that this is going to follow platinum pretty nicely, follow the other two white metals, platinum and palladium. Downtrend break here. Not picture perfect. Again, rhodium is an even smaller market. And again, we're breaking out here in March, bull flagging. It's just a matter of time before we go to 700. And then you have double bottom target, boom, there. Resistance at roughly 1,000, but targeting 1,500. And then obviously we have triangle high or all-time highs coming into play if we are lucky as well, which I think we are. So the white metals looks fantastic. So yeah, that is all. I hope you enjoyed this long video. Again, questions and all that. If you have a good ratio, let me know because I have, 50 that I track, give or take, and then I type in some random ones every once in a while. But if you have a good ratio that can show something important, again, let's say if you had like silver miners against the Nasdaq, just to be, you have to measure it against something very important. Then let me know in the comments and I will have a look. That is all. I promise you. Have a great day, guys. Cheers and bye.